Hello folks, welcome to Pro Trader Strategies Market Commentary for Tuesday, May the 25th. I'm Eric Wilkinson and you very well may recognize me as the Wolfman from mainstream media, where I talk about the economic data, geopolitical environment, and how those come in to impact the markets with some of my market analysis. I'm going to do the same thing for you folks in these market commentaries, but I'm going to talk about the option strategies I implement based on the assumptions I come up with. And we aren't just picking option strategies out of the hat. We look at the internals, see what the pricing is to see if they're cheap or expensive. That's going to determine our option strategy. And I show you how to spot that quickly in my webinars. Right now we're doing them on swing trade setups, so please check that out if you're interested in looking at charts and finding opportunities based on that. Finally, give me a smash on that like button if you would. It really does help. And without further ado, let's get on with the economic data. I told you it's going to be a light week this week, and it is. Although today, probably one of the better days for economic data. Later on in the week, actually, we get some core durable goods numbers, and I like to look at those too. So anyway, let's get on with this economic data. We got the home price index coming in again higher at 1.4%. It was expected to be 1.1%. Also, last month's number came out where we showed another increase. I was talking about that. The average price was right around 330,000. That's continuing to increase because they did a revision to last month's number. It increased by 0.9%, which was better than expected. They revised that higher to 1.1%. So both the headline number and the revision on these new home prices are higher, okay? Now we look over at the new home sales. That came in a lot lower than expected, 860,000, missing by almost 100,000 houses. It was expected to come in at 950. Remember last month, we had that knockout, over 1 million houses built. Last month was the original reading, and they revised that down from 1,021,000, revised that down by over 100,000 to 917,000. So headline number missing by 100 almost, the revision missing by 100. That was pretty big and pretty significant misses in my eyes. Now, something to note, we saw those home prices going up. During that time, we actually saw interest rates slightly downtick, but inventories are starting to increase as people are like putting their houses up for sale just because they know the inventory is low and they know there's bidding wars out there. As a matter of fact, I have friends that sold their house. It went for over asking price, well over asking price. As a matter of fact, I would say it probably came in 10% above asking price almost. Folks, that's crazy. So anyway, 10% above asking price there, and they don't have a place to move to. Their kids are still in school here. They are looking for a place to rent. Okay, so that's what's going on, folks, and we're seeing these inventories start to come on where I think a lot of people are looking to jump ship on a house that may, especially here in Arizona, we have seen massive increases in values over the last 5 years. All right, so all of that being said, housing market struggling a little bit. Consumer confidence coming in lower than expected at 117.2, expected to be 119. And again, another downward revision to last month's number from 121.7 to 117. So a big revision to the downside. Richmond Fed manufacturing. Remember, we were getting mixed bags last time on these manufacturing index numbers. This one coming in lower on the Richmond manufacturing index at 18, expected to be 19. So that's all of the economic data. Not a very good look, to be quite honest. We're going to have to keep our eyes out for crude oil inventories and durable goods to kind of take this wet blanket off the overall market. To me, it feels really heavy, and I'm going to talk about some chart setups quickly, but I'm going to blow through these charts as I want to really get to some individual stocks that I want to look at and check out some charts. All right, so crude oil does, though, look like it could be topping as we get up near this area. We've been seeing that lose momentum. If the overall economy starts slowing where these numbers aren't looking as good, we're going to see crude oil start to look to roll over here. And I do still believe that we might make a valiant effort at testing 70 before we start rolling back over too much though. All right, gold futures came in about $3 shy of that 1900 this morning as we were peeling off to the upside. We're seeing Bitcoin see a little bit of weakness here. It's kind of getting stuck in the mud right here. It wants to be right here at this 3,700. That could be an area where we start seeing a value node build up there. A lot of the time volume has been much lower, as you can see, but then we've gotten this massive move last year. We're going to probably see that volume node start moving higher as value is clearly being accepted at higher levels than below 10,000. Bonds right now are moving higher. VIX giving us a little signal as to what's happening over in equities. As you can see there, Dow Jones Industrial Average, VIX, Dow Jones Industrial Average, most of the indices are a bit of a mixed bag at any given time. You can see NASDAQ was just in negative territory, popping into positive territory, but creating a topping pattern here. Dow Jones Industrial Average just slightly in negative territory, and E-mini S&Ps pretty much unchanged as well. Is this a pause? These chart patterns are not giving us a whole lot of clues as to what's going on in the markets, and I'm sorry to say, but I'm not going to give you a whole lot of insight into that, but we're going to look at some charts because they are typical as to confusion. We'll take a look at a confusing day. But anyway, E-mini S&Ps do look like we are finding a bottom, pretty much an inside day. To me, it doesn't feel like an inside day. It feels very heavy across the board in the equities. So to me, it feels like the risk now is to the downside. All right, XLU, the utility ETF, coming off today here. Something I wanted to talk about. I've got a working order to get out of this. Remember, I got in on this trade right here on this crazy pattern I want to talk about. Usually that is not a very good indication when you see those two lined up. You need to get a confirmation to one side or the other. It is a continuation pattern a lot of times, but on this day, we got the confirmation to the downside. That's when I decided to take advantage of some of this high implied volatility I was seeing in XLU and decided to go in there and sell the June 68 calls, all right? Excuse me, for 39 cents. Now, the market's gone completely sideways, but you can imagine yourself if you were doing this as a swing trade, and that's what I was doing this for, is a swing trade setup based on the confirmation to the downside here. So I'm selling those calls. Why? I have a downside directional assumption with high volatility. That puts me in the camp of collecting a credit because I know those premiums are really juicy. Well, the market goes sideways, but if I was in on this as a short or any other type of trade, I would have been very antsy, long puts or something like that. As the market bounced back, I probably would have lost money, panicked out if I was short this underlying, and if I was in the long puts going against me and some of that volatility coming out would have been very painful. For me with this strategy, because I set it up with the best possible scenario, high volatility, a nice confirmation, even though it went sideways, I knew because of that confirmation there was a bearish sentiment in the market based on those chart setups and the way that they acted. And that's what I talk about in these swing trades. So it gave me confidence to stay in this a little bit longer. And you can see I've ridden out quite a wild ride here. But because, like I said, I was using options, giving myself high probability trades with this XLU being up at 68. That was the high there with tweezer tops. So I'm pretty confident with that. Now getting this rollover today, pretty much same volatility as where I got involved in that. And that is fine. With this trade, I've been able to take advantage of the theta decay in this trade. With that said, it's right around 19 cents to get out. I'm working a nickel bid. So I'm just being diligent in case I get a bit of a slam down to that 50-day simple moving average. I might be able to get out of those on a flush of some type. And then also, Gilead Science is making a move to the downside today. And I'm looking to cover these as well. Now, if you guys remember, I put on this trade a little while ago in Gilead, and I did the August and I bought this 67.5 puts. I was pretty aggressive on this because of this chart pattern setup that we were getting. It did bounce against me for a little bit, but with this pull down today is helping out. Now remember, I'm long puts. I would like to see this volatility actually go up as we're seeing this big sell-off, which is generally what we would see. This is one of those times where we're actually seeing volatility continuing to come out. That means that there's not a whole lot of panic. Why? Because we're probably right back, or probably because we are right back down here to this point of control. That's where time and volume has been spent. That's where price has been accepted. It's going to be a comfort zone for most people involved in the stock. That, for me, being said, because I'm long puts, I don't want to see this thing really kind of stall out right here in and around the point of control. That would hurt me with the theta decay, okay? So I am looking to get out of this. I was looking for it to trade down to 65 when I put on this trade. That was my target for this. 50-day simple moving average, just slightly higher than that. But with that said, I am about $1 away from getting filled on this trade. I looked at the deltas on this, and right now it's trading around $3.90 to get out. If I get a dollar move, that delta is around 56 cents. So if I get a dollar move to the downside, then I will surely be filled on my offer where I'm working to get out at $4.30. So hits my profit target. That's where I'm looking, or hits my strike that I was looking for, or that point 65, or the 65 area, that handle is what I was looking for this trade. So as soon as it trades 65, I'm looking to pull the ripcord to get out of it. Or any type of really heavy move to the upside. Started making that earlier today, and that's what really got me on board with getting out of, or putting an offer in there just in case. And it looks like we're getting a bit of a flush right now. And then lastly, the last trade that I'm looking at here is LULU. If you guys, I got pin on the brain. A lot of the casino stocks looking a little heavy today. But LULU, if you guys remember on this one, it was based on all kinds of stuff where I had sold some puts. The market had gone against me. I covered the puts for a loss and basically had my average put me in at $300, and I think it was $16.30 or something is my break even on that. Anyway, I talked about this yesterday. It gets up there around 320. I was just looking to get out of this trade. We've got earnings right around the corner, so I don't want to mess around with any of that juking around. So I decided to get out of it early this morning and got out at 320.50. Obviously left some money on the table with this market moving to the upside, but like I said, I was looking to get out of that at 320 yesterday, so I'm more than happy to roll out of that trade. And finally, let's just take a look at some quick charts real fast, because they are all kind of setting up, at least when I started flipping through these type of scenarios where we're getting these counter-opposing dojis. I mean, this one had a confirmation to the upside. You get that bottom pattern, confirmation, and then you get these counter-opposing dojis. That kind of that generally speaking is a continuation pattern to the upside. But when you get a confirmation to the downside, that means it wants to roll over. That momentum is slowed. Those bulls and bears are battling it out for the last couple of days, and then you can see where the momentum is being lost. If we were to finish basically below those lows of the previous days, that would very much be a confirmation to the downside, which is what people look for in a swing type trade when those types of setups are happening. Now, the bank stocks looking pretty weak, making a lot of topping patterns. Goldman Sachs, even if you go over to like Visa, making a topping pattern there. What was it? American Express. Looked like it was kind of making a bit of a topping pattern. But let's look at some of these crazy looking chart setups. FDX, I think, had a crazy setup, that double pattern. Again, this is where we're looking at the last 3 days for the most part. That was not very good representation there. But basically these last 3 days where we're getting 3 or 4 days where we're getting these crazy hammers and hangman dojis going across the board there. IWM was one that was setting up for that as well a little bit, but we're going to have to keep our eyes out on these for the end of the day. Devon Energy, I think, is a confirmation one. No, this one was really crazy. You got this bottom, double bottom. That should have been like a bullish pattern. Then we get the a counter opposing one. Well, I'd be leaning towards a bit more of a continuation here, but then we get another one and another one. So this is what we're seeing with these hammers, and to me, it's this battle of the bulls and the bears going on, and there's no confirmation as to see who or to find who is winning. Again, here at the bottom of a move, we've got these counter opposing dojis. Usually it's a little bit more strong as a reversal when you get them at the very bottom or the very top of the move, which is why I wanted to bring this up. It's creating that bottom there. That could be a good signal for a bottom. If it's in a move like some of these other ones, it's definitely more of a crapshoot. If you jump on board something like Bank of America making a top here, flip side of what we saw there in Devon, happening at the top of a move, a little bit more significant of a topping pattern versus the bottoming pattern we just showed in Devon. So this is not something that I would ever jump on early based on a chart setup. That pattern alone at the top of a move without the candle counter opposing it right before, I would be jumping all over something like this to the downside. But because of that setup, I am going to be a little bit more cautious heading into that. And Adobe gets upgraded to $600 today. Adobe gets upgraded to $600 today by somebody based on them moving and catering more so to the social media, or basically the folks that are online creating content with the Adobe Photoshop and all of that stuff. All right, so that's about it. That's all I got for you folks. Take a moment to go over the disclaimer. Check out our webinar series on swing trade setups. I'm talking about when I see a swing trade, how to look at the internals to find the best strategy. And I streamline that process for you. All right, that's all I got for you guys. Other than if you can't smash that, take that. Bye for now and take it easy.